Welcome to Counttuts. In this lesson, we're going to be looking at the Trade Payables General Ledger account, otherwise known as the T account. We're going to do a T account for a specific month for trade payables. Now, if you'd like to understand more on trade payables specifically, we've done a lesson on that, and it details what you need to know about trade payables, what it is, what it affects, how it's recorded, and how it impacts your financial statement. So if you'd like to check that one out, you'll find the link to that lesson in the description below. Additionally, we've also done lessons on the trade receivables general ledger account, as well as an explanation on what trade receivables is. You'll also find the links to those lessons in the description below. Another lesson you'll find is one on T accounts, explaining what T accounts are, why we do the T accounts, and how we go about doing it. So if you don't understand how to do T accounts or the general ledger accounts, you'll find a link specifically on that, and it's Accounting for Beginners Part 3, which you'll find below, as I've mentioned. So let's have a look at this question here. First thing we're going to do is to read what the required is, and it's at the bottom here in red. Record the above transactions in the trade payables general ledger account for the month ended 31 January 2025. And so we know that we are doing it for the month of January 2025. Now we can go up and read our information. We are told here that you are the accountant for Silver Threads Limited, a company that purchases goods on credit. The following transactions occurred during January 2025. And we are given transactions from number 1 all the way to number 9. And so for each of these transactions, we have to determine whether it affects our trade payables, and if it does, where is it recorded in our trade payables general ledger account. Remember, we are doing this for the month of January. That means anything that affects our trade payables for this particular month will be captured in the general ledger account for trade payables, and that's why we're doing the T account, to see the movements during a specific period in time, in this case January 2025. And so here I've drawn my T account. It's written trade payables. You've got the debit on the left hand side and credit on the right hand side. Now, supposing you didn't check out the lesson that I alluded to on explaining what trade payables is and how it's recorded, in a nutshell, trade payables is money that we owe our suppliers because we have bought from them on credit. So whenever we buy from our suppliers on credit, and what do we mean by on credit? It means that we didn't pay them cash. We are taking the goods from our suppliers or a service from our suppliers, and we're only going to pay them at a later stage. And so we might have a credit term with our suppliers of 30 days, for instance. That means we can buy from them, take the goods, and only pay them 30 days later, or at least within the next 30 days. And so that is what it means, trade payables, as buying from our suppliers on credit. If we are buying in cash, that does not affect trade payables. Remember, trade payables is a liability, meaning what we owe our suppliers, and we can only owe them if we've bought from them on credit and not in cash. Because if we buy from someone in cash, then you don't owe them anything. So as I've just mentioned, trade payables is a liability, and when do we record our liabilities? We record our liabilities on the credit side. So anything that increases our trade payables, such as purchases of goods from our suppliers, we record it on the credit side, because trade payables is a liability, they increase on the credit side. And anything that reduces our trade payables, such as us paying them what we owe them, we record on the debit side, okay, because that reduces our liabilities, i.e. trade payables in this case. So let's go through our information. Number 1, the trade payables account had an opening balance of 50,000 Rand on the 1st of January 2025. Now, when you're doing your T account or your general ledger accounts, that's the first thing you want to start with. What is my balance brought down? Okay, what is my opening balance for the period? And we're told here it's 50,000 Rand on the 1st of January 2025. They could have said that the closing balance for December 2024 was 50,000 Rand. It would be exactly the same thing. Remember, the closing balance for the previous month would be the opening balance for this particular month. So we're going to record this 50,000 Rand on which side? On the credit side, because that's where our trade payables increase. So that's the first thing you want to look out for. Look for your opening balance for your trade payables, and then you record it on the credit side. And we're going to put our date there as the 1st of January 2025, and the detail is balance brought down, and the amount is 50,000 Rand. So let's go ahead and do that. Here we go. The 1st of January 2025, detail balance brought down, and the amount is 50,000 Rand. So whenever you are putting your opening balance, which is the first thing you always do, you will put balance brought down, okay, to indicate that this is my opening balance, as well as the date. We're not told to put our dates here, but we're going to put our dates nonetheless. So now that we've put down our opening balance, let's highlight that one as we have just completed it. You want to get into a habit of highlighting whatever you've done, so that you can see what you've done and what you may have missed once you are done with all the transactions. And so that is usually very helpful when you're going through your work. Okay, so let's look at number 2. Goods worth 30,000 Rand were purchased on credit from suppliers during the month. So we're going to put it on the credit side because now this increases how much we owe our suppliers, meaning our trade payables. So anything that increases how much we owe our suppliers, we put it on the credit side. And so what are we going to call this? Well, we're going to call it purchases. Okay, so we're going to put our date as the end of the month because we're not given the actual dates of the transactions during the month. If we were told, for instance, that number 2 happened on the 15th of January, then we'd have to put the 15th of January. But since we're not given any other dates other than the opening balance, we're just going to put the month end date, which is the 31st of January 2025. So we're going to put that date, and then we're going to put purchases, and we'll put 30,000 rand. So let's do just that. There we go. Put all our information here. So whenever you purchase from your suppliers on credit, you put it under your trade payables on the credit side, and the detail there is purchases. Now, I must give a disclaimer here. You might be doing the trade payables general ledger account and you're told that the company uses the periodic inventory system or the perpetual inventory system. And so in this particular question, we have assumed that the company uses the periodic inventory system. If you're not told at all, I'm guessing you can assume the same, okay, that it uses the periodic inventory system. Otherwise, if it uses the perpetual inventory system, instead of us putting purchases, we'd actually put what is called inventory, because we are buying inventory from our suppliers, or trading stock, okay, the same thing. So you just have to be careful about that. If you're told that the entity uses the perpetual inventory system, wherever we put our purchases, you just put inventory or trading stock. If you want to understand more on the difference between the perpetual inventory system or the periodic inventory system, we've done a lesson specifically on that as well. You'll find it in the link in the description below. Otherwise, everything else stays the same. So let's keep going. We've just done number 2. Let's highlight that one. Number 3, payments totaling 45,000 rand were made to suppliers during the month. And so we are paying our suppliers here. We owed the money, but now we are paying them. What does that mean? It means it reduces how much we owe our suppliers. That means our trade payables is going down. We put it on the debit side. So we put the end of the month again. If we're given the date for the payments, we would have put that date. But as I've mentioned, if you're not given, you just put the end of the month here and we put the amount. Or if you're told that you can ignore the dates and you don't have to put any dates. So here, what are we going to do? Put the end of the month, 31st of January 2025. The detail there is going to be bank because we are paying our suppliers. So we put bank and the amount there is 45,000 rand. So whenever you pay your suppliers and you're told that you've paid them, you always put the detail as the bank there, and the amount is 45,000 rand. So here's how it's going to look. The 31st of January 2025, the detail is bank and the amount is 45,000 rand. Easy to do. Let's keep going. Let's highlight number 3. So we've just completed it. Number 4, the business returned goods worth 8,000 rand to suppliers due to defects. And so what has happened here? We've just returned goods to our suppliers because they were defective. And so whenever we return goods to our suppliers, in this case worth 8,000 rand, it means we no longer owe them the 8,000 rand, right? Because we've returned the goods to them. And so if we've returned the goods, we don't owe them for those particular goods. And in this case, it's 8,000 rand. And so it's reducing how much we actually owe them. That means we put it on the debit side. So whenever you return goods to your suppliers, you put it on the debit side of the trade payables general ledger account. And what do we call this? We call this purchase returns. So here's how it's going to look. We put purchase returns there and we put the 8,000 rand on the debit side. Again, if you were using the perpetual inventory system, like I mentioned earlier, instead of putting purchases returns here, you would put inventory or trading stock because that's what you're returning. It's going out of your premises to the supplier. But in this case, since we're not told, as I've mentioned, we put purchases returns for whenever we've returned goods to our suppliers. So let's go back, highlight that one. As you can see, if you understand the principles, it's easy for you to do the general ledger account here, especially if you checked out the lessons I alluded to earlier, particularly the explanation on trade payables, as well as how we do T accounts, where we'll go into more detail on that. Otherwise, just checking out this lesson, I'm sure you should be getting an idea of how we go about completing it. Number 5, a discount of 5,000 rand was deducted directly from the payment made to the supplier as part of early settlement terms. And so what has happened here? We're issued with a discount, which is good for us. Whenever someone issues you the discount, that's a good thing. You're saving on the money you could have otherwise paid them. Okay, so it was deducted directly from the payment that we made to them. And so what do we call a discount? Well, whenever we receive a discount from our supplier, there is an income account because it reduces how much we owe our suppliers without us paying them. Okay, because it's a discount. So we're going to put it on the debit side. So whenever you receive a discount from your suppliers and you're doing your T account or your general ledger account for trade payables, you always put it on the debit side. So we're going to put discount received on the debit side and put 5,000 rand. So let's go ahead and do that. Discount received 5,000 15,000 rand. You notice here that I'm not putting the dates. Why is that? Well, that's because the dates that are following is the same as the first date for bank. Okay, so the date for bank is the same as the date for purchases, returns, and the discount received, going all the way down. So if the dates for the transactions that are following are the same as the previous one, then I don't have to repeat the date. Okay, you can see here we repeated on the credit side because the dates were not the same. Easy enough. So let's go back, highlight that one. Number 6, a supplier's invoice for 15,000 rand was found to have been entered twice in error. Okay, so when they say a supplier's invoice, it means the supplier invoiced us for goods that we bought from them on credit, but it was entered twice by mistake. So what do we need to do here? Well, we need to reverse the second entry that was done in error. That means the other 15,000, because they recorded two 15,000s in this case, as we have been told here. It was recorded twice. So the first 15,000 rand is fine, but the second one is incorrect. So we need to go to our T account and correct the error. Now, what did they do initially? Well, as I've just mentioned, whenever we buy goods from our supplier, then we receive an invoice from them and we record it on the credit side, right? Because it's a liability, just like any other purchase that we make from our supplier on credit. And so that means that an extra 15,000 is currently sitting on the credit side by mistake. So what do we need to do? Well, we need to debit the entry. So we're going to debit the other 15,000 to correct the error, because an extra 15,000 is incorrectly sitting on the credit side. So you want to think of it in those terms. What would they have done incorrectly? And then once you have determined that, then you see, okay, I have to do the opposite to correct the error in this particular case. Again, you can refer to the lesson that we did on the suspense account and correction of errors to understand more on this. Otherwise, it should be clear from that explanation. So we're going to the debit side, we'll put 15,000 rand. And what is the detail going to be here? Well, the detail is going to be purchases, okay? Because when we purchase from suppliers, we record it on the credit side and we write purchases, as we did previously with transaction number 2. And so we need to reverse that recording of purchases, okay? So we're going to put on the debit side purchases 15,000 rand. So let's do just that. Here we go. You can see on the debit side purchases 15,000 rand. Now, if you've just forwarded the video to this particular point and you just look at this T account, you may notice we have purchases on the credit side and purchases on the debit side, and you may think, wait, something has to be wrong here. And so that is why the explanation is very important. We have to put the purchases on the debit side here. The only reason we're doing that in a trade payables T account is to correct an error, okay? Because we record purchases on the credit side with trade payable. The only time we're putting it on the debit side is the correction of error. I hope that's clear enough, okay? You never record purchases on the debit side whenever you purchase from your suppliers. You always record it on the credit side. Unless it was incorrectly recorded, as is the case here, then we correct it by putting it in the opposite side, which is the debit side in this case. So let's go ahead and highlight that one. Number 7, goods worth 10,000 rand were purchased in cash during the month. Now, I hope you paused the video, you attempted the question here, and you were able to determine that this does not affect trade payables. Why is that? Well, it's a cash purchase. So you must know already that any cash purchase does not affect my trade payables. Okay, I hope that's already clear enough. Only when we purchase on credit, that is what affects our trade payables. So I'm going to highlight this one in red because it does not at all affect my trade payables. Number 8, the company incurred 7,000 rand in transportation costs for goods purchased on credit, which was paid directly to a third-party logistics provider. Now, here's what I'm going to say. Whenever we purchase inventory, the value of our inventory is not just the purchase price of the actual inventory. We also include the transportation cost, okay? And that's the rule according to IFRS, which states that all costs that I incur to bring my asset to a place and condition where I can use it, or in this case, sell it, that will form part of the cost of my inventory. In this case, what's happening here is that we're not doing an inventory T account, okay? That's the first thing. The second thing here is that if we are buying from our supplier, and they are charging us extra for transporting the inventory to us, and we have not paid them yet, yes, it would affect our trade payables. But in this case, what's happening? We are paying it to a third party, okay? And we have already paid it, okay? We are told here which was paid directly to a third party. So it has no impact on my trade payable. For one, we are paying it to a third party and not to our supplier. And secondly, we have already paid it, okay? So it has no effect on my trade payable. So I'm going to highlight this one as well in red because it does not impact trade payables. And the last one here, a supplier's invoice of 12,000 rand was disputed due to incorrect pricing. The supplier agreed to adjust the invoice down to 10,000 Rand and the correction was recorded. Okay, so what do we need to do here? Well, we need to do the correction. And as you can see here, we are told that the correction was recorded, but we're not told specifically where the correction was done. Okay, so we still need to make the adjustment in our T account. So what do we do here? Well, a supplier gave us an invoice. We recorded it as 12,000 Rand. But now we disputed it because they incorrectly charged us. And so it should have been 10,000 Rand. The supplier has already agreed to mark it down to 10,000 Rand. That means we're going to record the difference between the 12,000 Rand and the 10,000 Rand. They overcharged us by 2,000 Rand. Okay, 12,000 minus 10,000, that's 2,000 Rand. So if they overcharged us by 2,000 Rand, we need to reverse that 2,000 Rand that is currently sitting on our credit side, if you will. Okay, so we're going to put it on the debit side, okay, as we did with transaction number 6. So we're going to put 2,000 Rand on the debit side and call it purchases, because remember, as we've mentioned already, when a supplier issues you the invoice, you record it on the credit side with the amount that is on the invoice, and in this case it was 12,000 Rand. But now that we've disputed it and the supplier has agreed, we now reverse the 2,000 Rand by putting it on the debit side and we call it purchases, okay? Because initially we would have called it purchases when we recorded it on the credit side. And so we are reversing what was incorrect here, which is the 2,000 Rand, by putting it on the debit side. So let's go ahead and do that. Purchases 2,000 Rand and we put it on the debit side. Now, if we go back here to the question, the only thing which might be an issue here is the fact that they told us the correction was recorded, okay? But here we've assumed that they didn't record it in the journal entry. Perhaps the transaction was recorded on the purchases account, but it was not recorded on the T account, okay? So here we're assuming that it was not recorded on the T account. But usually if you're told that the correction has been captured, the correction has been done, then you know that you don't have to do anything. But sometimes they will be clear to tell you that no entry has been made in this regard or no correction has been made. And that is where you'll record the 2,000 Rand. So that's what we're going to assume here, just for the sake of understanding what you do when you have such a scenario where there is incorrect pricing. And that's exactly what we did by putting the purchases 2,000 Rand here. I hope that has made sense. We assumed here that there was no correction done to the trade payables account, okay? And that's why we recorded it here. If it was done to the trade payables account and that's what we were told, then we would not have had to do any entry here. And I hope you have an understanding why we're putting purchases on the debit side here, okay? I don't want you to be confused here. It's because we are correcting the errors which were made. The first one here is of course the double entry which was made incorrectly. The second one here is where we were overcharged by 2,000 Rand, and so we are reversing it here. Let's go back now and highlight number 9 because we've just completed it. And as you can see, we have highlighted all our transactions from number 1 all the way to number 9. So what do we still need to do? We need to close off or balance off our T account. So let's go back here. And if you checked out our accounting for beginners part 3, or you also checked out our trade receivables T account lesson similar to this one here, but specifically for trade receivables, you already know this. How do we close it off? Well, we compare the debit side to the credit side. What do we mean by that? We mean the total of the debit side versus the total of the credit side. Whichever side is bigger, we put it on both sides, okay, at the bottom as the totals, and then we see what's missing on the smaller side and we put it as the balance carried down. So let's do that. As you can see here, on the credit side we've got 50,000 and 30,000 Rand. If you add the two together, that's 80,000 Rand, and it's obviously more than my debit side, okay? Because if you add all this together, it won't be more than 80,000 Rand. So we'll put the total of the credit side on both sides. So let's do that. 80,000 Rand on the debit side and 80,000 Rand on the credit side. Now the next question we ask ourselves, what is missing on the debit side to make it equal the credit side? I.e., what is missing on the debit side to make it equal 80,000 Rand? Well, we're gonna take the 80,000 Rand here minus the sum of all these amounts here, and it will give us what is missing on the debit side, and we'll put it down here as balance carried down. And so let's do just that, to put balance carried down, and you will note if you added them together, the missing amount is 5,000 Rand to make the debit side equal the credit side, okay? And once we've done that, we now go to the bottom of the bigger side, in this case that is the credit side, and we put the date of the following month, which is the 1st of February 2025, okay? Because we're doing this for the 31st of January 2025, and so the following month, the first day of the following month is the 1st of February 2025. And so we're going to put it down here as the date, and we're going to put it as balance brought down, and we put 5,000 Rand to show that the credit side is bigger by 5,000 Rand, and that, by the way, is going to be my opening balance for next month when I'm doing the T account for trade payables. So let's do that. Here we go. 1st of February 2025, balance brought down, and the amount is 5,000 Rand, and that is what I will begin the next month's Trade Payables T account with, as I've just mentioned. I hope this lesson was clear. I hope you've gained value from this lesson. You now know how to handle a Trade Payables General Ledger account or T account, and you're able to do this quite easily. If you've gained value, consider subscribing to our channel, like this video, share it to those who think it might help. And if you'd like to join our channel to support our efforts or also get access to the documents that we have, as well as some additional videos which are available only for members, you can join our membership on the button below written join. Otherwise, till next time, cheers.